Welcome back to XRP Pulse, your trusted source for the latest XRP news, price analysis, and market updates. Today we're diving into a fascinating development that has the entire XRP community talking. The headline making waves across the crypto market is this: XRP price prediction. XRP enters rare oversold zone seen only 4 times in 13 years. Could a major rebound be next? After months of relentless selling pressure, uncertainty, and market-wide volatility, XRP is once again capturing the attention of traders, investors, and analysts around the world. While the broader trend remains under pressure and sentiment has been mixed, several long-term indicators are now flashing signals that have historically appeared only during some of the most important moments in XRP's history. These rare readings have sparked a fresh debate about whether XRP is approaching another major turning point. As the market continues to search for direction, many investors are wondering if the recent weakness represents the final stage of a correction or the beginning of something much bigger. Today, we'll break down the latest technical developments, analyze what leading market experts are saying, and explore whether this unusual setup could potentially pave the way for XRP's next significant move. One of the key reasons analysts are paying such close attention right now is the growing evidence that XRP has entered a deeply oversold condition. Historically, periods like this have not occurred frequently. In fact, some market observers point out that similar conditions have only emerged a handful of times over the past 13 years. Whenever such rare signals appeared in previous cycles, XRP eventually experienced meaningful shifts in market behavior. Of course, history never guarantees future performance, but traders often study past patterns because financial markets tend to move through recurring cycles of fear, uncertainty, accumulation, and expansion. The current environment appears to be heavily influenced by caution and skepticism, yet it is often during these periods that long-term opportunities begin to form. Investors who focus on market structure rather than short-term headlines are closely watching whether XRP can stabilize around current levels. With the XRP price hovering near the $1.12 region and trading below several important moving averages, the market remains under pressure. However, some analysts argue that the very conditions causing concern today may ultimately become the foundation for a stronger recovery tomorrow. Among the analysts maintaining a long-term bullish outlook is well-known crypto market commentator EGRAG Crypto. Recently, he reaffirmed his confidence in what he calls the blue scenario, a framework that he believes best aligns with XRP's long-term market structure and future trajectory. Rather than concentrating on daily price fluctuations, this approach focuses on broader trends involving liquidity, investor behavior, macroeconomic influences, and historical price patterns. According to EGRAG, the blue scenario remains the most logical pathway based on how XRP has behaved throughout previous market cycles. His analysis suggests that while short-term volatility may continue to create uncertainty, the bigger picture remains intact. Many experienced traders appreciate this type of analysis because it emphasizes structure over emotion. Markets often experience dramatic swings that can cause investors to react impulsively. But long-term frameworks help maintain perspective during turbulent periods. EGRAG's continued confidence has encouraged many XRP supporters who believe that temporary weakness does not necessarily invalidate the broader bullish case. Instead, they view current conditions as part of a larger cycle that may still have significant upside potential ahead. The chart associated with EGRAG's analysis highlights several important price zones that traders are monitoring closely. Key levels near 0.7770, 1.1600, and 1.6500 have become major areas of interest as market participants evaluate the current correction. These levels are not being treated as guaranteed outcomes, but rather as reference points that could influence future price behavior. Support and resistance zones play a crucial role in technical analysis because they often reflect areas where buyers and sellers have previously shown strong interest. When price approaches these regions, market activity frequently increases as traders make decisions about entering or exiting positions. The significance of the 1.1600 area is especially noteworthy because XRP has recently been trading around that range. Meanwhile, the 0.7770 level is viewed by some analysts as a potential downside support zone if additional weakness emerges. On the upside, the 1.6500 region represents an area that many traders would like to see reclaimed as evidence that momentum is shifting back in favor of the bulls. These levels continue to shape market expectations as investors search for clues regarding XRP's next major move. Another major topic dominating discussions within the XRP community is the asset's recent drop below its 200-week simple moving average, commonly known as the 200 WSMA. This long-term indicator is widely respected because it helps identify broader market trends and has historically served as a significant reference point during major market cycles. Falling below the 200-week moving average is rarely viewed as a positive development in the short term, which is why many traders have been paying close attention to this breakdown. However, historical analysis reveals an interesting pattern. Previous occasions when XRP traded below the 200-week moving average did not necessarily lead to permanent weakness. Instead, they often resulted in extended periods of consolidation before the asset eventually regained strength and reclaimed the level. This historical behavior has encouraged some analysts to remain patient despite current challenges. Rather than focusing solely on the decline itself, they are studying how long it may take for the market to rebuild confidence and establish a foundation for future growth. In many cases, the strongest recoveries emerge only after lengthy periods of accumulation and stabilization. Looking back at previous cycles provides valuable context for understanding the current situation. Historical data shows that XRP has spent significant periods trading below the 200-week moving average before eventually recovering. One of the most notable examples began in 2022, when XRP entered an extended consolidation phase that lasted approximately 2 years. During that period, many investors became frustrated by the lack of upward momentum, yet the eventual breakout that followed demonstrated the importance of patience. Markets rarely move in straight lines, and major trend reversals often require substantial time to develop. This historical precedent has become an important part of the current discussion because it suggests that rebuilding market strength may take longer than some traders expect. While investors naturally prefer quick recoveries, experienced market participants understand that sustainable trends often emerge gradually. The comparison to previous cycles does not guarantee a similar outcome this time, but it does provide a useful framework for evaluating current conditions. Understanding how XRP behaved during earlier periods of weakness helps investors maintain realistic expectations as they navigate today's market environment. As analysts examine potential downside and support levels, several volume-weighted average price zones have emerged as areas of interest. These levels are important because they reflect historical trading activity and often serve as locations where buyers may become more active. Among the most frequently discussed support regions are approximately $0.97, $0.83, and $0.69. Each of these levels corresponds to significant points in XRP's historical price journey. The $0.97 region is associated with the January 2023 market structure, while the $0.83 level traces back to activity surrounding the June 2022 lows. Meanwhile, the $0.69 zone carries additional significance because it aligns with the dramatic market conditions experienced during the March 2020 financial crisis. Traders often monitor such levels because they can provide insight into where market participants may perceive value. If XRP experiences further downside movement, these zones could become increasingly important. On the other hand, if price stabilizes above current levels, the existence of these support areas may help reinforce confidence among investors who are searching for signs that selling pressure is beginning to weaken. Adding another layer to the analysis is a Fibonacci extension target that some technical analysts have identified near the $0.77 region. Fibonacci analysis remains one of the most widely used tools in technical trading because it helps identify potential support and resistance zones based on mathematical relationships found throughout financial markets. While no technical indicator can predict future movements with certainty, many traders incorporate Fibonacci levels into their broader decision-making process. The $0.77 area has attracted attention not only because it aligns with Fibonacci calculations, but also because it carries psychological significance. Round number regions and historically important price zones often attract increased market interest. Analysts emphasize that this level should not be viewed as a prediction, but rather as a potential reference point if market weakness continues. What makes this particularly interesting is the overlap between multiple technical indicators converging around similar areas. When several forms of analysis point toward the same region, traders often pay closer attention because the probability of market reaction may increase. For now, the focus remains on whether XRP can maintain stability before any deeper correction develops. Perhaps one of the most important milestones bulls would like to see is XRP reclaiming its 200-week simple moving average. Such a move would likely be interpreted as one of the earliest signs that the recent breakdown is losing momentum. Reclaiming major moving averages often carries psychological significance because it can influence investor confidence and shift market sentiment. When an asset successfully regains an important technical level, it frequently attracts renewed attention from traders who were previously waiting for confirmation. A successful recovery above the 200-week moving average would not instantly guarantee a sustained bull market, but it could provide evidence that buyers are regaining control. Many analysts view trend reversals as a process rather than a single event. First comes stabilization, followed by the formation of higher lows, then improved momentum, and eventually a reclaim of critical technical levels. XRP's ability to navigate these stages will play a major role in determining whether current oversold conditions evolve into a meaningful recovery. Until then, investors remain focused on monitoring price action for signs that the market structure is beginning to improve. One of the most talked about developments in recent XRP news is the appearance of a rare relative strength index signal on the monthly time frame. The RSI is a momentum indicator used by traders to evaluate whether an asset may be overbought or oversold. While short-term RSI signals occur relatively frequently, monthly RSI readings carry much greater significance because they reflect long-term market behavior. According to market observers, XRP's monthly RSI has entered a deeply oversold reset zone that has appeared only 4 times over the past 13 years. Such rarity immediately attracts attention because unusual signals often indicate that market conditions have reached an extreme. Extreme conditions do not automatically trigger reversals, but they frequently precede important shifts in trend. The fact that XRP is now displaying a signal with such limited historical occurrence has sparked intense discussion throughout the cryptocurrency community. Investors are examining previous examples to understand how the market responded and whether similar patterns could potentially unfold again in the months ahead. The historical significance of this RSI signal becomes even more compelling when examining prior occurrences. Market observers note that similar monthly RSI conditions appeared before the major 2017 expansion during the 2020 market reset, throughout the compression phase of the 2022 bear market, and now once again in 2026. Each of these periods represented moments when investor sentiment was either extremely cautious or deeply pessimistic. Interestingly, some of the strongest market advances often emerge from environments where confidence is at its lowest. This does not mean a rally is guaranteed, but it highlights why experienced traders pay attention to rare momentum signals. Financial markets are driven by cycles of fear and optimism, and extreme readings frequently indicate that one phase may be approaching exhaustion. The appearance of this signal for only the 5th time in more than a decade explains why it has generated so much discussion. Investors recognize that while history may not repeat exactly, it often provides valuable clues about how market participants respond when conditions become unusually stretched. What makes the current setup particularly fascinating is the contrast between technical indicators and prevailing market sentiment. Despite the emergence of rare oversold signals, many investors remain cautious because broader market conditions continue to present challenges. Interest rates, macroeconomic uncertainty, regulatory developments, and overall crypto market performance all contribute to the environment in which XRP operates. This creates a situation where technical analysts see potential opportunity while risk-conscious investors remain hesitant. Such disagreements are common near major turning points because the market rarely provides perfect clarity. Instead, investors must weigh evidence from multiple sources and make decisions based on probabilities rather than certainties. The coexistence of fear and optimism often defines transitional periods in financial markets. Some traders believe current weakness represents a buying opportunity, while others prefer to wait for stronger confirmation before increasing exposure. This tension between competing viewpoints contributes to market volatility, but also creates the conditions under which significant trends eventually emerge. Another factor supporting increased attention toward XRP is the growing recognition that long-term investors often focus on different metrics than short-term traders. While daily price fluctuations dominate headlines, institutional participants and experienced market observers frequently prioritize broader indicators such as market structure, momentum cycles, and historical valuation ranges. The current oversold conditions fit within this long-term framework because they suggest that XRP may be approaching levels where risk-reward dynamics become increasingly attractive. This does not eliminate downside risk, but it changes the conversation from panic-driven selling to strategic evaluation. Long-term investors understand that opportunities often appear when market sentiment is weakest. Throughout financial history, assets that eventually delivered strong returns frequently experienced periods of deep pessimism beforehand. XRP's current situation reflects this dynamic, which is why analysts continue studying whether present conditions resemble earlier stages of significant market recoveries. The answer remains uncertain, but the similarities to previous cycles have undoubtedly captured widespread attention. As the market moves forward, investors will be watching several critical developments. The first is whether XRP can stabilize above current support levels and avoid deeper weakness. The second is whether momentum indicators begin showing evidence of improvement. Third, traders will monitor the asset's relationship with its major moving averages, particularly the 200-week SMA. Finally, market participants will continue evaluating broader crypto market conditions because XRP rarely moves in complete isolation. The combination of these factors will help determine whether the current oversold environment evolves into a prolonged consolidation period or the early stages of a larger recovery. While opinions differ regarding timing, there is broad agreement that the coming months could be highly significant for XRP's long-term trajectory. Investors recognize that rare technical signals deserve attention, especially when they coincide with historically important market structures. Whether the next major move arrives sooner or later, the current setup has clearly positioned XRP at the center of an increasingly important market conversation. For now, the most important takeaway is that XRP has entered territory rarely seen throughout its 13-year history. Deeply oversold conditions, a historically significant RSI signal, long-term support zones, and ongoing discussions surrounding the 200-week moving average have combined to create one of the most closely watched setups in the cryptocurrency market. While risks remain and uncertainty continues to influence investor behavior, the emergence of these rare indicators ensures that XRP will remain under the spotlight. Markets often reveal their most interesting opportunities during periods when confidence is scarce and expectations are low. Whether this moment ultimately becomes another chapter in XRP's recovery story or simply an extended period of consolidation remains to be seen. What is certain is that traders, analysts, and investors around the world will be watching every development closely. If history offers any guidance, Rare signals like these deserve attention. The coming weeks and months may provide critical answers about whether XRP is preparing for its next major rebound or continuing its journey through a challenging but potentially transformative phase. Thanks for watching XRP Insider, and stay tuned for more XRP updates, market analysis, and breaking crypto news.